All right, so this is the Alpha Lab research pipeline that I built. Uh, so without going into too much detail, basically it just allows me to systematically research different strategy ideas. I can customize it and run it through a consistent engine and back end. But one of the things that I needed to determine, so I started with a built-in optimizer, right? Because I wanted to be able to sample different features or different indicators or parameters and take a look at how it affected the quality and surface of those particular parameters. But I realized that I had implemented these objectives, some basic objectives that I thought were pretty good to start with, but I didn't really have any empirical reason to pick one over the other, and I didn't really want to get into, basically data mining for the best result based on objective. I wanted to choose a consistent objective that I would start with for the majority of my projects and to eliminate at least one degree of freedom in this whole process. So that's what this video and research is about. So let's get to it. So I started with, what is this? 7 total different objectives. And I wanted to see which one correlated the best with out of sample outcomes. So here's a research question, and let's get into it. Which optimizer target should we trust out of sample? In this, we tested whether the score that looks best during in-sample optimization actually points to portfolios with better future paths. So comparing 7 optimizer targets with 2 future test periods with one main goal, right? And this is really the key part, because we want to get a result that compounds with the best path possible, right? And we'll talk a little bit more about that as we continue. First things first, the educational risk disclosure. This is for educational research only. It is not personalized investment, trading, legal, tax, or financial advice. Trading and investing involves risk. You can lose your principal. No strategy or model guarantees profits. Typical past performance cannot guarantee future results. Evidence limits. These are backtests and holdouts. They depend on assumptions and historical data. Validation does reduce false confidence, but it does not remove uncertainty. And then the scope, these examples are research artifacts, not trade instructions. Objective rankings are evidence for review, not a recommendation to buy or sell. Position sizing, taxes, suitability, and execution constraints are out of scope. So let's get to it. So the idea is a good final return can hide a bad ride, right? And so I wanted to grab an example of 2 different paths to show this, right? And why this why this led to choosing which metric that we're looking at as a means to evaluate the best optimizer to use. And so we can see that, for example, one path on the left has a much cleaner overall path and ends in a positive run with a very modest drawdown, where to the right we can see that the path is just bad overall in terms of final equity or terminal value. It's also pretty volatile as well. And this is based on the fact that I chose to use a metric called the geometric Martin ratio, and we'll go into what that is. But based on this ratio, we can see that the value of this ratio does work in terms of choosing paths that are much more sustainable out of sample versus another metric, right? Like a high geometric Martin ratio implies a positive path on its way to a good terminal value, whereas a low value is the opposite, right? A negative path that is volatile and tough to hold. And that's especially true if we are trading a leveraged instrument which has decay built in. So let's look at it. One other thing. So again, this metric, it rewards compounded growth per unit of path pain. So a path with a modest return but persistent drawdown ranks poorly, right? So plain English, we want to grow this capital out of sample. We want to avoid long, painful drawdowns. And we can use a raw max drawdown level as a veto. So, for example, even if we have a really good high Martin ratio, but say that the max drawdown is still like 30%, something like that, that might be too large to hold over any period of time. So we would still have to start at square one or rework the strategy or portfolio to be better. So the numerator is compounded growth, and the denominator is path pain, I think, with the ulcer index. So let's take a look. Which targets produce the best future paths? One thing to note is initially I ran this on a more recent out of sample period from 2018 to 2021. That is the cyan colored bars. And then as soon as that was done, I realized, okay, you know what? I can already imagine if I was to watch this or research this or somebody was presenting this, I would say, okay, well, that's a really short, 3-year period or so. What about a longer period? How would it perform? So I did an extended out of sample period, non-overlapping period from 2012 to 2018, and then I compared them. And so we can look at the out of sample geometric Martin by period, and we can see, for example, sharpe ratio surprisingly does really well for this, especially for the extended period in comparison to the rest, and looks to be on par or near the top for the recent period. So we can see how the rankings changed in terms of the stability metric. So this stability metric we'll talk about in a second, but this is the custom ranking that I used to choose which optimizer would be the best to use going forward. By the way, the VI composite is a combination of the sharpe ratio, the gain to pain ratio, and the omega ratio. So we can see on the more recent period, 2018 and 2021, that was number one, sharpe ratio number two. And then they swapped for the extended period. So that's a pretty good sign in terms of the stability of these metrics, in terms of their overall ranking. We can look at the forest plot and take a look at the distribution of these scores. So I use the information coefficient between the in-sample and out-of-sample paths that were chosen to determine how well these metrics predict out-of-sample. And so we can see again for the extended period, we can see how how well Sharpe ratio does in comparison to the other metrics. On the shorter period, they're a lot more in line with each other, which I think is pretty interesting. What else stands out? Total return having this extended period doing really well is pretty interesting as well to me. This is the so this is the information coefficient from both periods, and we can see again how well that Sharpe ratio does over the extended period, and then it holds its own in the recent out of sample period. And then again, total return does a really good job here in terms of having a very high information coefficient in the extended period, but it's really low in the recent period. So, none of them are really like stable except for calmar ratio, which is interesting. But if I had to go overall, you probably would lean towards Sharpe ratio. And then just for robustness check, we can look at the same type of forest plot, except using the geometric holding period of return. And we can see still that the Sharpe ratio is still the best in both periods, followed by the V1 or VI composite. So those rankings still don't change much. We're looking at the common sense ratio promoted by Laurent Bernoux. And we can see that the overall rankings are still relatively stable, although in the shorter period, most of them move to a negative or near zero Spearman information coefficient, which is pretty interesting to me. I want to go to the stability score. So this is how the stability score is created. So first, it's the geometric Martin ranking for each of the optimizers, the objectives that we use for the optimizer. Then it is the information coefficient using the geometric Martin rank or geometric Martin ratio, and then the window consistency. And we use those ranks, come up with an average of those ranks, and that is the stability score. And we can see that the Sharpe ratio is the best, gain to pain ratio, and the VI composite tied for second place. This is only for the extended period, I believe. This is not both periods averaged together. I just wanted to show this as an example of how the stability score was created. So, what should we take away? Overall best Sharpe ratio within this experimental design. It was the best longer period signal for future path quality. Next up was the VI composite. Strong recent. It was ranked number 1 and still competitive in the longer test. And then next up was the gain to pain ratio. It looks better in the longer term test than the recent test. And then middle of the pack was the omega ratio. So the bottom line is we wanted to use a path quality score as the main out of sample target. Sharpe and VI are the current finalists, with Sharpe leading on the longer future test. So this is the one that I would be using. Now, at the end, you might ask, okay, so why didn't you use the geometric Martin ratio as the objective directly? That's a good question. I actually just had not implemented it yet until I was doing this research. So with that said, I will probably add that and then test it again. But for all intents and purposes. Right now, sharp ratio is good enough to continue with. Or if I don't like sharp alone, I can use the composite and feel good about either or.